tomorrow. Well, Dinshaw Irani is with us, CEO of Helios Mutual Fund. Dinshaw, good to have you with us here. Thank you very much for your time. Prashant, this side. Dinshaw, just a quick word. Let's just start with that slightly macro-ish take. Which sectors stand to benefit the most here in India? If we are about to get 125 basis point rate cuts in the US, and is there going to through the course of the year, not tomorrow? I mean, by the end of the year. Go on.
I got that. So thank you for having me on your show, Prashant, and a very good afternoon to you and your viewers and your team, of course. So basically, Prashant, the expectation is a 25 bips cut next this 18th rather, and then probably in November you'll see another 25 bips. There was a rumor that it'll be 50, but now I think the consensus is coming closer to 25, and then December again at 25. So basically, this year itself, we may look at a 75 bip kind of a cut, which earlier also was expected, but I think that's what the market is discounting. Having said that, obviously, emerging markets as a whole itself should, I think, be a beneficiary, because if there's such a big cut happening there, the money flows normally to emerging markets, which are supposed to be the beneficiaries of rate cuts, and that's normally what happens. And India, being where it is today, I think will be a big absorber of this kind of money which flows out. Basically because India, I mean, the other competition used to be, say, China. China is not doing too well on the economic front also. In fact, nowadays, there are question marks even on the data that comes out of China. Nobody is, comfortable with the kind of data that is coming out there. And and then there were these markets of Taiwan and Korea. They have their own geopolitical issues. So that's on the back burner for most. And India being a big market which can absorb big money, I think that's where the flow is.
Okay, so all markets will be beneficiaries, including us. Got that point, Dinshaw. Thanks for joining in. Great to have you on. So I was poring over the fact sheets July and August, trying to see what's changed. Actually, not much. It's interesting. You folks continue to show lots of love for the financial services space, right? So I think a lot of the bigger banks are still very much a part of your core holdings. I did note more IT. I think there's been some load up on stocks like Infosys. So just tell us the thought process. I mean, top down, is it banks and IT? Is that what you are looking to stick to, at least for now, and why so?
So should be when the interest rate cycle turns, I mean, whenever the cuts happen, I think for us in India, I think we're starting off with RBI infusing some liquidity back into the system as such. I think RBI has been trying to manage the rupee for a long time, as in the rupee dollar parity as such. And that's why the infusion of liquidity is what we're looking at. If that happens, raising our deposits becomes much more easier. And obviously, the demand for credit has never eased off. I think the banks are being more prudent in controlling the credit growth as such, given their credit deposit ratios are going out of whack. So I think that should be a very big positive for the lenders per se. Having said that, in the BFSI space, there's a very big bunch of non-lenders also. I think that is where the excitement is all about. And when I say non-lenders, I mean the mutual fund space, or you're talking about wealth managers, or the market-related plays like your depositories and stuff like that. I think they're doing phenomenally well in exchanges too. Also, that includes that also. So you are seeing some lot of growth there. And having said that, on IT front, our call was when the numbers for TCS came out. I mean, June numbers for TCS came out. I think it was somewhere in the beginning of July, the second week of July, I believe. And that's when we realized that, look, and by the way, we consider TCS as a bellwether for the IT industry in India. And what we did realize was that with the addition of manpower, things are easing out. Obviously, the undertones, when you did listen to the con call with the management, they were sounding a bit more confident than what they were earlier. So obviously, things look pretty good here. And secondly, what tilted us in favor of IT was that with these kind of stretched valuations across industries, especially in the FMCG space, when markets are at such stretched valuations, normally people believe that FMCGs are a hiding place. For us, it wasn't proving to be so, because the growth rates there are not too exciting at all. IT, if things come back to normal, we're looking like at, say, early or mid-teens kind of growth once again. And obviously, the valuations are way below half the valuations of the FMCG companies. So that was a perfect place for us to go and park our money and look at growth happening simultaneously.
Dinshaw, just to go back to that point on the non-lending businesses, and you mentioned wealth managers and capital marketplace, right? The question really there is on valuations. And I could ask you that question even on, on housing finance. Look at the newest kid on the block. I don't know if you can shed some light on maybe not the stock per se, Bajaj Housing, but just the market's whole approach. Because here suddenly the market's willing to sort of deal with top dollar valuations. So again, whether it's something like housing finance and a new franchise that's just come to the market, or it's capital market plays, do valuations still give you comfort there?
No, so basically, you said the right thing. I mean, housing finance is a lender, so that's why I was more referring to the non-lenders. But even in that space, so be right. If you look at the historic valuations, you won't be touching those companies with the barge pole. Also, in fact, but the fact is that look at the way forward. I mean, I was just looking at some numbers, which were macro numbers as such, and I mean, kind of savings that have gone into. In fact, I was very surprised to see that after demon, in I think it was 15, 16, when the financial savings in I think shares and debentures by households was at 20 odd thousand crores, and immediately after demon hit, it shot up to 1,75,000 crores. And there was like I don't know what changed in those couple of months. I think maybe I'll leave that off. I won't speculate also. But the fact is that these guys are the gatekeepers to these kind of savings. And obviously, this is just the beginning. I think the potential in our country is too huge. We've still got a huge population to crack. We just got 14 or 15 odd crore demat accounts. I think that we got a long way to go. So these are the players you want to be with. And given the kind of growth, I think we can live with those valuations.
You know, we were talking about wealth management companies. Dinshaw, there was just an anecdote. I mean, nothing to do with that discussion or adds no value to what we're talking about here. But I was talking to somebody who was setting up a business, a financial business, and he was looking to hire some people at junior levels. And he said, "Well, he told me, he said, I've sworn I won't hire people from wealth management firms because they're just unaffordable." So you were talking about wealth management firms I mean, the stocks have done so well, and the thing is, you said there are ESOPs, right, which have gone through the roof. So when you hire, you got to pay, of course. I mean, whatever the cost is, and on top of that, take care of the ESOPs, which of course, have gone up 2x, 3x. So yeah, I mean.
So, Prashant, just to share another anecdote with you, we were looking at hiring some guys around, and obviously one of the wealth management firms employee had come to us. 50% of the bonus was ESOPs. So we said, wow, this is a nice way to give money without giving money. So
yeah, but that could be worth. I mean, I don't know if you did you make the did you make an offer?
I convinced the guy.
Okay, so better prospects with Helios. Got that. What else are you looking at? Anything new you've done recently? Anything?
Prashant,
I was talking with Deepak Shenoy earlier about names like Zaggle and lots of these interesting names here and there, and too much to study and kind of get your head around. And these are kind of new businesses, right, which were not there earlier. Go on.
Definitely. I mean, Prashant, you're right, because this is what we're looking for. I mean, these are the exciting names. I mean, if you've seen my portfolio for August, you've seen quite a few of these platform companies making it into our portfolio as such, and we've been adding to these names. I mean, you can look at the portfolio and you can very well make out which companies I'm referring to. But there are names like, not names, rather they are platform companies in pharma space, which are doing phenomenally well. So those are the kind of plays we're looking at and the newer ideas that we're looking at. You talked about IPOs doing phenomenally well. I think that is the problem with our market, because we've got dearth of ideas. Everybody's seen the valuations, and whenever a new company comes, it just goes to the roof on the IPO front. And I think the FIs also are participating in a big way in that market as such. So these are the basically the platform companies are the ones which are really exciting for us. I think we got 4 or 5 of them in our portfolio.
Yeah, absolutely, you do. I think you have Paytm, and I think
First Cry.
First Cry
Yeah.
is something they own, and this is all published. I mean, we're not sort of revealing anything new here. So you can check out for yourself the portfolio at Helios as at the end of August. Dinshaw, great conversation as always. Thank you very much for joining us. Appreciate it. And thank you till the next time we speak. Well, I think we got the market up 40, so 25,000.